Welcome to ForexTV.com. Today is Friday, November 21st. I'm Kathleen Reddington with your New York Forex Market Buzz. The U.S. dollar heads for a weekly gain on the euro. And now for a look at the latest headlines from the CEP News Desk. Canada's headline inflation rate dipped to a lower than expected 2.6% in October. On a month-by-month view, the consumer price index shrank by a seasonally adjusted 0.5%. According to preliminary estimates, the Eurozone manufacturing PMI fell to a record low in November, coming in at 36.2. Down from both the 40.5 expected and October's 41.1 level. Reports said Citigroup was considering breaking up or selling the company sent shares surging in pre-market trading, but the rebound didn't materialize at the open and shares were down 8%. The Bank of Japan held its target rate at 0.30%, as was widely expected, and said that the Japanese economy had slowed down significantly, and also that these conditions will last for several quarters. Furthermore, the bank said the outlook for the economy is highly uncertain. Today, we are joined by Rob Booker of Interbank FX. Hi, Rob. How are you today?
I'm doing great. Thanks for having me.
Now, if we're seeing Citigroup, if we see Citigroup get bought out, how does that change the game, or is it just going to be one more in a long line of banks?
It's probably one more in a long line of banks, and it certainly, I think, is more of a surprise than it would have been maybe even a couple months ago. I think that we were under the impression that, at least from the side of propping up banks, that the situation was under control. But I think it's being proven again that regardless of the intervention and regardless of the packages that are being put forward, some of these problems are beyond the capability of money to solve. And you can't solve a flood by pouring water on it. And it seems like we're trying to solve a crisis that was caused by too much liquidity, by throwing more liquidity into the game. And that's really not resolving the major issues.
Do you think we'll see this change anything for the dollar going forward, or no?
Well, it certainly changes the game as far as risk is concerned. Once again, it puts more pressure on every other currency in the world, except for the Japanese yen, against the dollar. So I'm still bullish on the dollar, and I haven't lost that perspective. I haven't sort of shied away from that perspective. I've been long the dollar theoretically and practically in my own trading since the beginning of the year, and it's still not over yet for me. I'm still looking for the euro to fall a bit more, the pound dollar to fall a bit more. Those two in particular.
All right, and we saw the CAD fall almost 200 pips in overnight trading, but it seemed to have found a somewhat temporary bottom this morning earlier. Do you think we'll continue to see the CAD fall?
Well, I mean, isn't that the $50 a barrel question right now? I mean, where is oil going to go is probably the more significant question as it relates to the Canadian dollar. Typically and historically, there's been a fairly significant correlation between the price of a barrel of oil and the exchange rate of the dollar CAD, or even more specifically, the Canadian dollar Japanese yen. And, have we seen a bottom? Is $50 maybe a psychological level at which we're going to find some support for oil? Well, if that's the case, then we should see the Canadian dollar stabilize as well. And I'd say for the time being and for the short term, that's very likely the case.
All right, and now for keeping on with some commodity currencies here, we saw the Aussie and the Kiwi fall lower, pretty much lower and lower. The Royal Bank of Australia started buying some of its own currency. Right now, they're headed toward two-week lows as equities in the U.S. continue to fall. Do you see a bottom for them, or is it still up in the air?
Well, unless China is going to really move forward very quickly on some of these infrastructure plans and buy just piles and piles of rocks from Australia, it's unlikely that there's going to be a significant increased demand for what Australia has to offer. And if you're not buying things denominated in Australian currency, it's going to continue to put pressure on the currency. And furthermore, I mean, we went from one of the highest interest rates set by a central bank in the developed world. I mean, the Reserve Bank of Australia had rates as high as 8.25% or so a year ago, and they're quickly dropping those rates. That's putting more pressure on, because if it's not paying the interest it was before, there are fewer and fewer investors, large and small, that are willing to keep those investments denominated in Australian dollars. So there's two things going on. There's an import-export problem they're facing, and there's also an interest rate problem they're facing. Doesn't seem like either of those two things are letting up, so there could be more pressure on the Australian dollar for sure.
Now, we touched on dollar-euro a little bit just before, but the yen and the dollar up on the euro as risk aversion continues, and on lower equities. Is it going to be the same tune for the weekend?
There's no question it's going to be the same tune as far as I'm concerned. And of course, it's certainly possible, of course, that Europe can announce on Sunday night that they have just bought the entire U.S. banking system, or that, something extraordinarily awesome has happened for the Eurozone. But the Eurozone's under a very similar type of pressure as some of those other currencies we talked about. There's going to be a manufacturing slowdown. There's a central bank that was an inflation-fighting central bank, maybe the leader in the fight against worldwide inflation over the last 4 years, that is now stuck in the situation that inflation is no longer the concern. It's economic growth that's the concern. That's going to put pressure on the euro continually until we see the world economy stabilize. It's going to force the hand of the European Central Bank, and even if they don't lower at the next meeting, it seems inevitable that we're in a cycle of lowering interest rates. That's putting pressure on the euro until some of the circumstances that are creating the situation ease up. I really can't see how that's going to be possible for them to really hold on to, any of the temporary gains that they might have.
All right, Rob, thanks for being on this show today.
Thank you very much.
This has been your New York Forex Market Buzz with Rob Booker of Interbank FX. I'm Kathleen Reddington. Join us later this afternoon, 4 p.m. exchange, right here on ForexTV.com.